like little change this morning after a roaring 3% surge yesterday, and it's continued push from last week. Let's kick off this morning deep into Asia with Peter McGuire, CEO of XM Australia. Peter, Omicron is behind us. The markets are roaring back to that $80 where they were very happy. What's your take on the direction of things at the moment?
Well, good morning, Sean. Greetings or good evening from Sydney. I'll tell you what, a cold, wet Wednesday evening here.
Oh, wow.
And it's the start of summer.
Well, so it's a lovely 25 degrees here, I have to say. The sun is out and all is well. And we're even changing our, you know, you guys changed the hours of your days back and forth. We're changing our week. We're now moving to Monday, Friday. It's under this move an hour this way, an hour that way. We changed the week. That's
the way you want to play, brother. That's the way you want to play. So building on your question. And welcome everyone. Building on your question, look, all I can say is what we saw overnight was very, very strongly bid up, as you mentioned, 3% for Nasdaq. It really shot the ball out of the park. S&P bid up, and so was the Dow. As far as Asia today, it's been a fairly strong day. New Zealand's up 2%, and most of it's green lights, so that's a strong point. Crude has been a dynamite trade over the last, 3 or 4 sessions. Incredibly volatile, Sean, and just offering so much opportunity from a trading perspective. So US dollar still sitting at 96.15, 96.20. Maybe we're going to see a little bit further uptick for that. Inflation's out of control in the States, as we all know. China's doing pretty well with inflation, and the rest seems to be booming. Santa Claus rally on the way through.
Santa Claus is coming to town. Rustin Edwards, head of fuel oil procurement, Euronav, sitting in the heart of Europe. Where in Switzerland last week, I think it was, they were running out of ICU beds in Zurich. Does it feel like we're on the other side of Omicron, sitting in the center of Europe?
Nope. In a nutshell, it's a pretty bad situation. 10,000 cases a day currently in Switzerland. They've activated military medical units as of yesterday to help alleviate the strain on the hospitals. ICU beds are at 31% occupied with COVID cases. Now, the issue here is, or the data is yet pointing, is this Omicron or is this Delta? It's a combination of the two, basically, from what they're seeing right now. But, the biggest issue, just like in most of Europe, is the lack of vaccine uptake. I mean, we're still stuck at this 65, 66% of fully vaccinated individuals, which is, I think, pretty much the average across all of Europe. And the caseloads are reflecting that. So, I mean, it's not happy days here yet. They reduced the quarantine to 0 because they realized Omicron is everywhere. So there was a short-lived 10-day quarantine that lasted about 3 days. And then after they did pool testing, they said, oh, never mind, the horse is well out of the barn. The barn is burned down, and we'll have to live with the consequences at this point.
Well, let's leave it up to Vandana Hari to explain, the founder and CEO of Vanda Insights. We've got Omicron still tearing up Europe and other places, obviously, but it was the trigger that made the oil markets collapse a week or so ago. Now, not the case. How do you read things vis-a-vis that as a factor for the markets?
So staying on the local weather theme, let me start off with a good afternoon from a balmy 28-degree and very windy Singapore.
Is it ever anything but 28 degrees and balmy in Singapore?
No, but I
maybe the wind changes. It's a little windier.
Very much. Yes, December and Jan tend to be windier months of the year. So look, we had a $13 to $14 drop in crude from, if you take 25th of November, just before Omicron stormed onto the center stage of the global markets, to December 1st, which so far was the trough of this Omicron downward spiral. $14 lost, about 13 to 14 lost between TI and Brent, $6 to $7 have been reclaimed. So basically half of the fears, half of the fear-driven slump in crude has been reclaimed, which one would argue, which would lead one to argue that there is plenty more headroom. But I think in both cases, when it came to the sell-off, the panicky sell-off, and the optimism that seems to have come back into the market, I would say that it is quite an emotional reaction. I think the markets in general will continue to have a very emotional reaction to whatever big news headlines that hit us on the COVID front. So just as it was a bit overdone on the sell-off side, I would think that any recovery of that territory might also be a little bit premature. So long story short, I think we're going to continue seeing a lot of volatility. Yes, there seems to have been a bit of a some reassurance that Omicron so far has not turned out to be as lethal. But I think, again, the caveat, maybe again, the market is running a bit ahead of itself. That's a possibility. I think the caveat here is that whatever we have, data and information we have so far, is still quite preliminary and based on very, very small sample sizes.
Peter, you mentioned in your earlier comment the reference to inflation. I was just looking at your note last night. Your daily note, you're up to a 4-decade high. We have the Fed sitting on comments of accelerated taper. What's your outlook for that? And what does it cross into the energy markets if indeed they do accelerate the tapering?
Well, Sean, is 7 going to be the handle? As we're going to be at about 6.8 odd. Is 7 going to be the handle that we say, well, that's as far as we go, or by February, are we at 8% or 8.5%? So that really creates, I think, a lot of fear as far as the Fed's concerned. Taper, I think they'll have to move possibly a little bit quicker than what is expected. Do we get 2 rate rises baked in for next year and everyone's saying it's already in the cake? Or do we hit 3? I heard a guy say, I heard someone say 4, and I've even heard rumblings of 5. So there creates a lot of angst for traders and certainly for participants as far as bond traders and currency traders.
So are you saying, Peter, that you could see the two things happening simultaneously, not only the pullback on the bond buying, but also rate rises at the same time? Or are these staggered one after the other?
Well, I think they'll be staggered one after another, Sean, but I'm not sure of the velocity, how quickly they'll be rolled out, because if we're at 8% by February, the Fed's got to move probably far quicker than what they thought. It's certainly not transitory, and that creates a lot of fear. So from a trader's perspective, so that really is the unknown pushing forward. And this all creates, I think 22 is going to be a very dynamic year and a very volatile year. What happens as far as crude prices? Possibly they do march up further from here. Maybe they do hit it through an $80 by Christmas. It's been an extraordinary, as you're building on what Vandana said, an extraordinary month or matter of weeks for a trader. And I think that there's possibly further upside leading into Christmas.
Wow. Rustin, a week ago, people might have been scratching their heads on OPEC's decision, but ultimately it seems it was the right one. We've got the market moving up in the days after. We have the inventory report out of the US, API numbers yesterday, big draw on stocks. What are your thoughts on OPEC's decision?
Well, that was a stock draw on crude. You had big builds in products. So take that stock draw on crude with a little bit of a grain of salt. You also had a build in Cushing based on the API as well.
Okay.
We'll see what the EIA data says out today, but with increasing U.S. production coming up, you've got the increase in refinery runs. I always expect to see crudes draw this time of year and products build this time of year. That's kind of the seasonal pattern when it comes to oil in the United States and their inventory levels. But, OPEC increasing production by 400,000 barrels a day, that is a number and it's not a reality. I mean, I think everybody can agree that OPEC has not been able to keep up with the pace of production increases that they keep saying they're doing, mainly because you have too many laggards who don't have the real capacity to increase their production accordingly. I mean, if you look at forward freight right now, forward freight would tell you that there's still a lack of crude oil in the market because freight rates on tankers are still relatively low, and they haven't really found the boost yet. So, I think we're probably missing somewhere between 200 to 300,000 barrels of production from OPEC that they've said that they've released, but it hasn't.
Well, over the first 4 months of this deal, which is 400 a month over 4 months, 1.6 million barrels, they're down 600,000 barrels. So they've only delivered 1 million so far.
Yes. And so, okay, OPEC can say, hey, we're going to release 1 million barrels a day. But what's the real reality of being delivered to the market is a far different number, and that's keeping the market on a relatively tight footing from an OPEC supply perspective.
Vandana, we've also had earlier this week the Saudi OSPs surprisingly elevated going into Asia, given the weakness of demand there. Your thoughts on that and how that will land with Asian refiners?
So I think it was the Saudi move was a bit in line with the narrative that we saw coming out of the OPEC Plus meeting in general. And just to add to what Rustin was saying, I think my own view was that it was, given the circumstances, quite a mature, cool-headed decision by OPEC Plus. Equivalent of jawboning, one could argue, that they were saying that, well, the market is getting ahead of itself, factoring in the worst case scenario, but it's too soon to do that. And, the way I looked at it was, the decision by OPEC Plus that, let's not bolt out with cuts just yet. Let's wait and watch had a sort of a calming influence on the market. And as far as demand is concerned for January or for the first quarter, I think generally, and we had the EIA come out yesterday and say pretty much what we have been hearing for the past few months, that first quarter of next year, the world is probably going to flip into an oversupply situation, and which continues to grow throughout 2022. That's the forecast. But I think to some extent, Saudi Arabia was probably, I see it as an extension of that sort of jawboning or sending a signal to the market that we are not that scared of demand. And if you look at Asia, yes, the growth rates, I think, especially if you look at China, what's happening in India, the crude demand growth rates are not going to be spectacular. And especially as the months go on and we go into 2022, the year-on-year rates are not going to seem as spectacular anymore, for sure. But it's also not falling off a cliff. And increasingly, I see with Omicron and listening to what my fellow panelists are saying so far, the world is finding a way to move on. All of that put together, again, I wouldn't be too worried about Asian demand. Of course, it's not going to be spectacular, but perhaps go to more sustainable, moderate rates of growth.
Peter, is this Santa Claus rally one to sell into or buy into?
Well, Sean, depends on I think the instrument. If you're looking at crude, if you want to be a crude trader, then I think you've got to buy into it at the moment, because it's just showing strong move to the upside. It might get exhausted in a day or two from what we've seen, because it's been nothing short of dramatic. So the opportunities have been great. If you're looking at equities, this time last week it gave back at those soft non-farm payrolls Friday night underwhelmed, Sean. They were 300,000 odd shy, or 350,000 shy of what they forecast. So that coming in was certainly a dampener, and the Omicron story. Well, if you're looking last night, it was a Pearl Harbor delight for all the bulls. So I think from an equity trading standpoint, you'd have to be buying at this stage, because there's more momentum pushing prices higher.
From the Chinese perspective, I mean, the idea that the oil price recovery is could it test the previous highs we've seen? China demand looks increasingly uncertain. We had commentary earlier in the week that this might be the first year in 20 where Chinese oil imports actually decline year on year. The outlook there isn't solid. Hard to see new peaks in oil price if China isn't buying to the scale in which previously it was.
Yeah, I agree. I mean, we're only talking of, it's got the potential of probably an 80 to 85 handle, and we're not that shy of it at the moment. You've got, 75.5 for Brent, so it can get up there within by end of week. And I'm not saying it's going to be there, but I wouldn't be surprised in the next week or so. It still hasn't unwound the Evergrande story and the property sector, which generates or accounts for 30% of the GDP. So there is the concern, Sean, such a monster of value, $62 trillion, and the fragility of the Chinese economy over the next couple of months, I think is going to be, if the tide goes out, we'll see what they're actually wearing as far as swimwear.
Rustin, we won't ask you what swimwear you're wearing. You know, I know these Europeans, they like their at
the moment it's the winter parka.
Exactly. Fully long johns. But overnight we had this infamous Biden-Putin telephone call where brave Joe Biden told Putin that the things we did not do in 2014 when you invaded Crimea, we are prepared to do now. Is this a story the oil market is overlooking? Is it built in anyway to the price? Do you think the potential is there for something significant to happen?
Well, I think the potential is there for a mistake to happen because Russia doesn't really gain anything by invading Ukraine. The majority of the customers of Russian energy, which is a big driver of their GDP, are the United States and the European Union. And if Russia invades the Ukraine, is the EU and the United States going to say, oh, okay, here's your free pass. We still want to buy all your oil. We still want to buy all your natural gas. Okay, don't ever do this again, Putin. I don't think that's going to be the case. I think that's the reason why I don't think we'll see an active hot war. It'll probably continue on the same way it's been going on for the last 6 years between Russia and Ukraine, with separatist fighting in the Donbass region and trying to carve out a peaceful autonomy. And that's probably in the way it's going to maintain. I think there is nothing to gain between a hot war between Russia invading Ukraine. It just doesn't make any logical sense.
Vandana, we also have the geopolitics in this region. Obviously, at the time of there's a few things are going on, the Ukraine issue, we have the Iran nuclear talks in Vienna. And today we have the Saudi leader, Mohammed bin Salman in the UAE. He's going to Qatar tomorrow, where he's potentially could meet with the Turkish president, happens to be coincidentally in Turkey or in Qatar the same day as the Saudi leader MBS, and they are obviously two big actors in the region. I'm wondering from your perspective what this may or may not signal for the Iran talks. I mean, it looks like the chess pieces are lining up for Iran nuclear talks to be successful, because all of these things clearly are not coincidences.
So the last where we left off the Iran talks, I think the message coming out of Washington is that there was a bit of a stalemate, right?
Yes.
And the message coming out of Washington is that they think that if there is anybody or powers that can now actually lean on Iran or the conservative hardline government of Ibrahim Raisi, it's Russia and China. And quite coincidentally, as we were just discussing, the US and Russia are a little bit at loggerheads, more than a bit at loggerheads over the Ukraine issue. And it just so happens that the US and China are also at loggerheads. Well, they never really kissed and made up. But we saw the US saying that they will be boycotting the Winter Olympics. And you have a lot of rhetoric
on a diplomatic level, as they call it.
Yeah, okay. The officials, US
There'll still be people skiing down mountains.
Yeah, sure. But still, for whatever effect it has, the US is there's a lot of saber rattling going on, even US and China. So it's a little bit curious then to me that, if the US thinks that Russia and China at this moment hold the key, but if it comes to persuading the Iranians to come a little bit, away from their hardline stance, and they really are not in a position to lean on or to persuade Russia and China to do their bit. So look, as far as the oil markets are concerned, of course, I think the potential for Iran to come back, everybody is very aware that the talks have begun, and all good things and positive and optimistic things was said at the start, and now it's a stalemate. I think as far as the oil market is concerned, nobody is going to bake in the Iranian oil coming in until actually there is a signal. So, stocks have started or restarted. I think all of that is probably going to sit on the periphery as far as the oil markets are concerned. Going forward, the next few weeks, I think Omicron is going to be the single biggest determinant of sentiment, and perhaps to some extent what the Fed does and the signals it sends out after its meeting next week. I think those two are far more crucial for oil prices going forward than Iran geopolitics.
Let's go to the survey question and let everyone else have a little bit of a view here. Omicron is now in the rearview mirror for energy markets. Agree or disagree? Let's get thoughts on that. Peter, your thought on that? I mean, from an Australia point of view, you guys have finally seen the light, and we're opening up, and no more the zero, sort of zero tolerance. Where is it at, do you think, Omicron, from your perspective in Asia?
Well, in Asia, it's a different footprint to Australia, Sean.
Right.
If I talk about the Australian mindset at the moment, it's one of, I don't think it's hit Main Street significantly, and no one really seems to be talking about it, certainly not in the network that I associate with. So
right.
We'll just have to wait and see how it rolls forward in the next week or so. We are in Ireland.
It isn't reversing the trend of opening up that Australia has now departed on.
No, I don't believe so. So I believe we've still got green lights, and I think that as soon as next week there could be further lifting of certain conditions, which is a good thing. So that's where we're sitting at the moment. What impact it has to the markets? Well, if I look at the markets, if I see what happened as far as Wall Street last night, very, very strongly bid up. But the market's volatile. I mean, we might even go backwards tonight. Let's just wait and see, because it's we're only in the early stages of it, and time will tell, Sean, as far as the appetite, as far as investors and the sentiment running across the market.
Rustin, if we look at the sort of around the other narrative that's been with us for a while, congested supply chains, where is that at the moment? Do we still have 100 ships off the west coast of California and so forth?
Well, it depends on how far you want to look off the coast, because the Port of Long Beach and Los Angeles made a very good strategic move, and they pushed waiting vessels 200 miles offshore.
Whoa.
So when you start doing that, they created a necessary slack in the supply chain, because under the normal operating conditions of the port, the ships are sitting 2 to 3 miles off the sea buoy. Container ship finishes its cargo operations, takes a pilot, leaves the port, and as it's leaving the port, the next ship is lining up to come in. So the pilot jumps off one ship, gets on another ship, and that ship comes alongside the dock. So you have about maybe 3 hours of downtime at the terminal to get ready for the next vessel coming in. Pushing waiting vessels out 200 miles basically makes them 12 to 16 hours away from getting a pilot. So that just creates necessary slack in the system in order to evacuate the port and bring in the incoming boxes that need to be loaded on, so that you can actually start alleviating the supply chain crunch. So yes, there's still a supply chain crunch, but it is starting to come down, which is positive, because you've created that gap in timing to allow the shipping to come in on a more irregular basis, and thus create an opening for removing of cargo and positioning boxes to get out of the country. Freight rates have been reflected in that. Container rates have started to come down as a result, because again, now the stress is coming out of the system and things are starting to alleviate a little bit. The only flag, I think, to supply chains at the current focus is that if COVID continues moving up and China experiences another set of port lockdowns, then we'll have issues again.
And is there? I mean, the Chinese ports were proving to be quite cumbersome with crew changes and other things like that. Is it still similar?
That is still an issue, and it's not just in China. Like Singapore has put some restrictions back in place for crew changes again, mainly because of the Omicron variant in different locations in the world now. So I don't think that's going to be alleviated anytime soon. I mean, the interesting thing about China is that China has, they made an announcement that they've reduced the amount of capacity on the inland waterway system by allowing bargemen who basically move the box containers from the inland factories upriver to the export facilities to take early holiday for the Chinese New Year because of the internal travel restrictions. So they've actually stopped a lot of the traffic flow in the on the inland rivers in China in order to allow shipping or the maritime folk to get home and get back in time.
Let's get the survey result and give Vanda the last word this morning. Omicron is now in the rearview mirror for energy markets. 55 disagree, 45 agree. Certainly, maybe that's the 5 or 6 barrels of the 13 you were talking about earlier, Vanda, that has been recovered. Your sense of where this goes, all things being equal, if Omicron continues to drift into the rearview mirror, does the oil price continue to drift up?
So again, with the caveat that it's still, I think, early days. I think the WHO has said that we need at least 2 weeks to determine really the potential impact. And well, a lot of the other scientists that I have heard have actually said a few weeks. Even 2 weeks might be too little a time. So I'll go back to what I started out by saying, that I think the markets are in a bit of an emotional reaction mode. Personally, we all want to put COVID, pandemic, Omicron, and all other crons or what have you behind us. So, and of course, and it's the emotional human beings that are trading as well. So just as there was, I think, too much of a panic over sell-off, there is probably a little bit of too much of a swing to optimism that is happening as well. I mean, again, personally, I hope it's not. I hope the optimism does prove to be valid. But so far, from what we have heard, scientists speaking, and a lot of studies seem to be coming out of the research community in South Africa. The last that we have heard is it is much more transmissible than the previous variants, than definitely the Delta variant, which is not good news. Now, the other piece of the puzzle that the market is really waiting to find out is whether it causes more severe disease, whether it's going to cause more hospitalizations and more deaths. And of course, everybody's hoping that that's not the case. But to me, it was a little bit of a concern. The latest, again, just a very small sample size, but the latest that came out of South Africa yesterday was that the current Pfizer vaccination has way less potency or the Omicron is able to overcome the vaccine way more than Delta was. So, I would say that it's still early days. I think we could see a lot of back and forth and volatility in this market. At any point, I would caution against extrapolating whichever direction prices are moving in as that's the way to go. Basically, just brace for a lot of volatility. Peter was talking about buying into the Santa Claus rally. I think probably the oil community will be far more cautious in doing that as far as crude rally and rebound is concerned.
Yeah, it does feel in a lot of ways like we're still in sort of toppy territory, that there would need to be some serious wind in the sails to see breaking highs already seen in November. Let's wrap it up there. The oil prices are trading ever so slightly down this morning in Asia, now the afternoon, of course, in Asia, and Europe waking up. Will they take the momentum from yesterday? 3%, it's a big number, but we're still got a $5 off of 80. Maybe there's upside there, as Peter points out. Rustin, thank you as always. I don't think you guys will be on again before the holidays, but wishing you all very, very Merry Christmas. And thank you so much for all of your insights. And we look forward to seeing you on the other side of the new year and see where all of this is at to kick off the new season. But thank you. Merry Christmas. Thank you, Vandana. All the best in 28 balmy Singapore. I'm sure Santa Claus will still come, even if it's not snowing. Take care. Thank you very much.
Thank you.
Thank you, Sean. See you, Rustin. Bye, Vandana.
Everybody
Bye.
stay safe.